So you're thinking about making a move to the Lansing, Michigan area, and you might have a house that you need to sell before you actually buy here. Or maybe it's your first time buying a home and you don't know where in the world to start. Well, in this video, I'm going to explain to you the different types of loans that there are, and also be sure to stick around to the end, because if you've got a house that you've got to sell before you buy here, you're gonna wanna hear these tips. Believe me, you're not gonna wanna miss them. So let's get started with this next episode of Lansing, Michigan Life in 3, 2, 1, let's go. Hey there folks, Troy Seifert here with the Capital Area Real Estate Specialists in the Greater Lansing, Michigan area. I'm a top producing real estate agent in the Greater Lansing, Michigan area, and I get phone calls all the time from people all over the country, even all over the world, from people who are just like you watching this channel, people who are looking to potentially buy a home in the Lansing, Michigan area. So whether you're looking to move here in 9 days, 90 days, or 9 months from now, please feel free to reach out to me. All my contact information is in the description below. Feel free to call me, text me, email me, or schedule a Zoom call with me so I can talk with you face to face and kind of talk with you about your real estate goals. And again, even if it's 9 days or 9 months, or even, well, I guess 9 years would be a long time, but if it's a long time from now, reach out to me so that we can just kind of start that plan. Also, if you haven't already, I would really greatly appreciate it if you would like, subscribe to my channel, or ring the bell for notifications so that you can be the first to be notified when a brand new episode of Lansing, Michigan Life goes live. And we have new episodes going live once or twice a week. We are the fastest growing Lansing, Michigan channel in the entire country. So if you want to be able to get those notifications, ring that bell. Okay, so let's get started here with the different loan types that there are. I'm going to be covering the different loan types, and then again, many of you who are watching this might have a house that you need to try to sell before you buy, or you think you need to sell your house before you buy. But again, staying tuned towards the end, I'm gonna give you some great tips that you're not going to want to miss, because it's going to help you with the strategy. Because whenever you move here, and I've said it in other videos prior, whenever you move here, you need to have a strategy. You need to have a good loan officer, you need to have a good realtor that's very strategic as well to help you get your offer accepted. So at the time that I am doing this video, right now, the real estate market would still be considered a seller's market. But however, this video, even if you're watching it a few years from now and it's not a seller's market, it's a buyer's market, a lot of these concepts are going to be, or a lot of these loan types are going to stay exactly the same. No matter what market you're in, it's going to be good for you to know some of this stuff. But the strategies could change depending if it is more of a buyer's market or more of a seller's market. I see it being a seller's market for quite a long time, just because we don't have enough homes being built right now to make our inventory go higher. We shall see, but this is going to be a good video for anyone to be able to see at any point in time. So first of all, I wanted to get into the different loan types, and I'm gonna be pretty generic about this just because I am not a certified loan officer. I do have a loan officer or two that I work with. One of those loan officers is in the description below. You can reach out to them at any time, and all their information is in the description below if you would want to reach out to them. They're a good certified local lender, but I'm not going to get into the specifics of some of these. I'm just going to talk about it in general, enough to be dangerous so that you have an idea of what different loan types there are. So first of all, when I'm getting into the different loan types, the first thing I want to address is if you're somebody who's moving here and you have cash, okay? Because that's a way that you can pay for a house. That's not a mortgage type. But the thing I want to tell you, if you have cash, a lot of times people say the saying cash is king, right? But you still need to have a strategy, because there are in a very competitive market, which is what we're in right now still. Just because you have cash doesn't mean you're necessarily going to win. There are people that put in what's known as an escalation clause who have a mortgage, and they might go a certain amount higher than yours. And if the people look at the offers and they see they could get more cash maybe with the mortgage, they might be willing to take that risk. Also, sometimes people with cash think that they can get some money off of the house. If the house has been sitting for a while, maybe, but if it's the first week that the house has been on the market, you're probably not gonna get a deal on it. So if you have cash, again, I'm recommending to you, get with a realtor. You can get with myself. All my information is in the description below if you would like to contact me. Just because you have cash doesn't necessarily mean it's a lock that you're going to win the deal. But cash is the most preferred method of payment for a house. Okay, so I wanted to throw that out there. So the first loan type that I'm going to get into is what's known as an FHA loan. An FHA loan. This is a loan by the government. A lot of times people that get approved for this might have a lower credit score. So it does help people who are just having a tough time financially trying to find a house, right? No matter what income type you are at, with FHA, what I see is that sometimes they have very, not extremely lower interest rates than a typical conventional mortgage, but it can have a lesser interest rate. However, the thing that you need to pay attention to when you're looking into this loan is, are there additional costs? Are you gonna have to pay for what's known as private mortgage insurance? Which private mortgage insurance is a monthly fee that will be tacked on to your mortgage payment until you get to at least 20% of your loan being paid off. And if that's the case, you get a lesser interest rate, but you're gonna have to pay the principal mortgage insurance. It might not save you that much money. Also, what I find in our local market right now is that FHA loans can be a little bit harder to get accepted. And why is that? Well, with an FHA loan, you do have, a lot of times we encourage people to make it contingent on inspections, right? But after the inspections, when the appraisal happens, there's FHA appraisers who go in and they check inside the house for certain safety concerns that they might see. If they see chipped paint on the outside of the house, that's something they flag. If they see a handrail missing inside of the house, that is something they flag. If they're seeing something like, a roof leak at any point somewhere, they'll flag that. If they see any form of maybe some mildew or in a basement in Michigan, they could flag that. So I say all of that because when you get past the inspection, then the appraiser has to go through and then they have to say, hey, there are no future repairs that have to be done. So when you present your offer and that list agent sees your offer, thing you have to be aware of is that it might not get accepted because that's an additional step compared to some loan types that are out there. So I say that to you that FHA might give you a great rate, but look at the costs involved. Does it make sense for you? And then also be aware that you're going to have an additional step compared to some other loan types. Something for you to be aware of. So there is an FHA loan, and a lot of times you only need like 3.5% down to be able to do it. So a lot of people go with that because you need a lesser amount down to be able to pay for it. So again, it can be a great benefit if you don't have a lot of competition. If we're in a buyer's market, yeah, try out the FHA loan. But if you're in a competitive market, that might be one you might want to try to stay away from. Another type of loan type that's out there, and it's not extremely popular right now because of how competitive the market is, it's what's known as a USDA loan. And a USDA loan is typically more popular with a rural sort of property, and there's a map, a key that is used when looking for a property that could be USDA loan approved. Not every property is USDA loan approved. So you have to check with your lender to be sure, hey, is it in the correct area that I can get this? And then kind of similar to FHA, it is a government-owned loan and very low down payment, sometimes none, but they're gonna have repairs that might need to be done before it closes. And so it's not incredibly popular. I have done, in the 8 or 9 years that I've done this, I have done 2 USDA loans. A loan officer might tell you like this is a product that's offered, but it's not a very popular option that gets approved, okay? So just something for you to be aware of there. Okay, the next loan type, if you are a doctor, there are great benefits for you. Take a look at the physician loan. That's something that you will not want to miss. If you are coming from outside the state or even inside Michigan, and let's say you are self-employed and maybe you've only been self-employed for a year and a half, there are some banks that will do what's known as a portfolio loan. And what is a portfolio loan? So it is a loan made by a bank to where they give you approval, they get all your documentation, your income, and they look into see, is this a risk that our bank wants to take? And if so, we can create a loan. Now that interest rate might be higher than what a typical loan would be, but if you are self-employed and you're really needing to get into a house, you wanna be sure that you wanna get with a loan company that will potentially offer you a portfolio loan and just get a little creative. Or maybe you don't have a credit score and you just never got a credit card. Those of you who follow Dave Ramsey, maybe you were like, hey, I took his advice to heart and I never had any credit cards. Well, there can be some good and some bad to that, because if you're trying to get a mortgage, they want to see some credit. You still can have it done, but you would need to do what's known as a portfolio loan in that case, and they would just try to make the loan work. However, again, your interest rate would more than likely be higher, but that is another option for self-employed or people with no credit, but they've got good income and a good debt to income ratio. And debt to income is they're gonna have you submit documents of all your W-2s or 1099s, and then what they're gonna do is they will see what debts you have, and they'll take that ratio and they'll see if they can make a loan work. Okay, that's for any loan, by the way. Okay, so again, physician loan, portfolio loan, those are a little bit outside of the box from your typical options, but something for you to know. The next one we're gonna get into is one that you have heard about, more than likely. It's a VA loan. It's for the veterans in the military. And this has been a little bit of a hot topic for the VA loan. And why has it been a hot topic? Well, people want those in our military, we wanna show appreciation to them for the service that they have done, 100%. But the VA loan in and of itself, it is a tough loan to get accepted, and a couple reasons for that. So VA loan, it's a government-funded loan. As a veteran, you could have no down payment. You could have some fees waived. Great benefit for our military. But because it's a government-funded loan, it works very similar to FHA, meaning you're gonna have certain appraisers that take a look at it. The other thing I will tell you is with VA, and this is why it helps to have a local agent like myself to help you out, is that in our area, we only have 2 or 3 appraisers that are used for VA loans. And I'm telling you, not every appraiser that is VA in our area appraises homes correctly. I've had to contest some of them. So when you give an offer to a list agent and that reputation is out there, they might not take your VA loan because they're concerned, what if I get this appraiser or two that is going to make this loan tough? That they're gonna ask for a certain repair or that they'll underappraise it, right? VA loan's a great type of loan, but in a competitive market, it can be one where if you're a whole bunch of offers, they might push it over to the side. So you have to decide to yourself, is the benefit worth it? Or do I have enough money down that I could still try to get into a house and maybe do a different type of loan? Those are the things you have to consider. It's no disrespect at all to our military. It's just the type of loan that we have, and until certain things change in regards to this type of loan, it's just kind of the way that it is. So I did want to let those who are looking into a VA loan, don't shy away from it. I mean, I have accepted some VA offers when I've been a listing agent, but when talking with people and talking to them about the process, those are some things you just have to be aware of. Now, if you have VA or FHA loan where you have this appraisal that might need to happen, there are some options you could do to make your offer stronger. You could say to the seller of the property you're looking to buy, hey, we'll take care of all repairs up to a certain amount. I have seen that done. So there are options that you can have. It's just I want you to be aware that then you also have to deal with the appraiser, and you can't control who the appraiser will be. Just throwing that out there. If you're looking into a VA loan and you're from out of state or you're looking to move here, you might want to look into some other options. Okay. The next type of loan that's out there is what's known as a jumbo loan. There are some lenders that offer a jumbo loan. What is that? It's if you get, like, certain loans have a certain maximum loan that they will lend out for. Right now, for some of them, it's like around $700,000, $800,000 maximum that they'll give for a loan. Well, there are some properties in the greater Lansing area that are going for over $1 million. And if you're at that 1.2, 1.3 million, or you're looking to do a build job where you're wanting a custom built house and it's gonna be expensive and you're on land, a lot of land, what you can do is you can get a jumbo loan that allows for you to still be able to borrow at that amount. And also the thing that's kind of cool with that is, there's really no maximum to it. The interest rate could be higher, just to give you a heads up. But again, it's another option for those of you who are looking into the luxury home market. And that's gonna be something you're gonna wanna work with a local lender just to be able to look into some of those options. The next thing that is more specific just to Michigan in general, it's what's known as a MSHDA loan. MSHDA, which stands for Michigan State Housing Development Authority. So the MSHDA loan, they kind of combine it with like maybe a conventional loan, which is what I'm gonna get into next, but it's a first-time homebuyer loan that you have to have a certain income to be able to get it, and there is a certain maximum amount that you can have, but the MSHDA loan can give you some down payment assistance, and it's not quite as strict as the FHA or VA loan, especially if it's tied to a conventional loan, but there is an educational class that you would have to take as well, so a couple extra steps. There are some options in Michigan that if you wanted some down payment assistance, MSHDA could help out with that. Which then gets me into my last one, the conventional loan. The conventional loan, besides cash, conventional is the mortgage type that many list agents are really gonna wanna be able to see. So the conventional loan, why is that? Well, it shows people like conventional loan has the higher credit score, like minimum credit score. And then a lot of times the conventional loans, you wanna have close to 20% down. Why is that? Because then it can avoid the PMI insurance that I talked about earlier, like that can be waived. Also, they might have the best interest rates. If you have a higher credit score, the better the interest rate you will get. The other thing too with conventional loans is that they do qualify sometimes for an appraisal waiver. A lot of loan companies right now, if it's as little as 10% down, then you might be able to qualify for an appraisal waiver where you don't have to do an appraisal at all, which in a competitive offer situation, that could be huge because then you don't have to worry about the appraisal happening and maybe that would fall short of what the agreed upon purchase price would be in your purchase agreement. Conventional loan, definitely a step below cash. If you're gonna look for a loan type, that's gonna be the preferred loan type that you're gonna wanna have. We got through all the different loan types. Now what we have to talk about, because many of you who are watching this channel, you might have a house that you need to sell. And in your mind, you might be thinking to yourself, man, I got a house I have to sell. Like I can't buy a house in Lansing quite yet. And that might be true. It depends on the scenario. And that's why you need to get with a local loan officer, which you can contact the one in the description below, or get with me, reach out to me through text, email, and I can give you some of those contacts as well. So yes, you need to have a plan, but it doesn't necessarily mean that you have to sell your home first before trying to buy one. There are some different types of solutions that could be done that could help you out to make it as stress-free as possible. The thing I will tell you is in our area, if you put a contingent on the sale and close of your home and it's competitive, you're not gonna get it. If it's not competitive, what a good listing agent will do, which I do this whenever I receive an offer like this, contingent on the sale and close of your home, is I will put in what's known as a right of refusal. And it will be for a certain period of time, 24 to 48 hours. And what will happen is I'll say, okay, we'll accept this offer, but if somebody comes in with a non-contingent offer, then you guys will have whatever time limit, 24, 48 hours, to be able to remove your contingency, or we reserve the right to go with this other offer. So you run that risk as well. It can just be a risk to be able to put that in. Yes, there's a risk of what if our home doesn't sell? But the other thing you have to keep in mind too, you guys, if you're looking to sell your home, you have to look at the timeline. When you look to sell your home, you put it on the market, if you get an offer, and let's say it sells super quick, it will take from whenever you get an accepted offer to close, usually on an average of 30 days. Then that loan is paid off, you don't have to make another mortgage payment. On the reverse side, when you are looking to buy a home, the thing that you have to be aware of is that you put in an offer, it closes 30 days later, but then the rule of thumb is your first mortgage payment won't be until the following month. So if you close on May 2nd, let's say for instance, you close on May 2nd, your first mortgage payment would not be until July the 1st. So there's a longer turnaround time. You could have put that offer in April, right? So you put the offer in April, you close on it May 2nd, and then your first mortgage payment wouldn't be until July 1st. So as you're trying to look for a plan, think about some of that stuff, because then some of these options I'm gonna give to you might not be such a bad idea, right? So the first option that you can do is you can do what's known as a recast. If you have a lot of money set aside, not a lot, but like if you have about 5% of your purchase price set aside in a savings account, and the lender can give you a pre-approval without the contingency of your house selling, then what you can do is you can buy the house here, as long as you're approved for it, and then what they can do is what's known as a recast. And when you close on the home that you buy here in Lansing, then you have 60 days from when you can apply the principal on the house that you're looking to sell, wherever that is, and you can put all that money towards the principal, and then your mortgage payment would go down, and it would be the only time you could do that. It's not a huge fee to be able to do it. It depends from bank to bank, but just again, something for you to think about, that you could do a recast and you might have a month where maybe you had to pay PMI, private mortgage insurance. You might have a month where you're gonna maybe have a higher mortgage payment. But again, think through that timeline I told you about earlier, because that's gonna be important. The other thing you could do is what's known as a bridge loan. If you don't have that additional money set aside somewhere that you could just put as little as 5% down, you can do what's known as a bridge loan. What is a bridge loan? Well, what the loan officer will do is they will do a loan based upon the equity of the home that you currently own. So they're gonna do an appraisal on it. They will take that equity and they will apply it to the down payment of the house you're looking to purchase. It's a short-term sort of solution. You'll have a little bit of a higher interest rate on it, but it can help you remove the contingency of the sale and close of your home. Again, there's a little bit of a cost to it, but in this market, especially if it's competitive, it might not be a bad idea to be able to look at. I've had several clients do the bridge loan, and when it's explained to them, maybe even clearer than what I'm stating it being, they end up going with it and they're like, I'm so glad I did that because it helped me to be able to get into the house I'm in right now. That is another option for you. In closing, I just want to let you guys know, keep in mind, it is important for you when you get your offer accepted to have a local lender. And I will say it again, I have a local lender in the description below. Reach out to that local lender. I have local lenders, if you want, besides just one, I have others that you can reach out to me through calling me, texting me, emailing me, or even through the Zoom call that we do. I can give you those people. But having a local lender is key. Some of these nationally known companies will tell you, we got the lowest interest rate. But I'm telling you, when you give your offer to that list agent, the thing you need to be aware of is that when they get your offer, if it's a nationally known company that has a bad reputation, they might go with the local lender that they trust because they feel it'll be a smoother process, because they'll hit the close dates, because the communication issues will be good. Okay, it's not just about the price. Sometimes you got to have a good local lender. So I encourage you to use a local lender here as well. That will definitely help you. They'll be able to talk with you about all of your options as well. Okay, well that concludes this episode all about loans and options you can have. I hope it was beneficial for you. All my contact information is in the description below. Reach out to me anytime. Also, if you liked this video, if you could like it, if you liked just what you saw on this channel, please subscribe to my channel and then also ring the bell for notifications so that you could be the first to be notified when a brand new episode of Lansing Michigan goes live. Lansing Michigan Life goes live, not just Lansing Michigan. Lansing Michigan Life goes live. Love saying that 10 times fast, right? Okay, so again, thank you so much for watching this latest episode, and until next time, make it a great day. Take care.